Hi, it's me again. So welcome back to our session again around AI, which is the theme of today. So today we're going to be focused more on the due diligence side around how AI is being applied in financial services, specifically due diligence, where we look at topics such as sustainability, as well as the private markets, financial crime, and so forth. So as a starting point, perhaps, Dickens, you can start off with an introduction about yourself.
Well, Sabah Khair, and thank you so much, Jessica, and all of the team at ADFW for inviting me onto this panel. My name is Dickon Johnston. I'm the founder and CEO of Themis, which is an award-winning digital financial crime platform based here in ADGM. So really, we're bringing the very latest in AI tech to Abu Dhabi to help UAE businesses automate and streamline their due diligence on their clients, suppliers, third parties, and investors. And finally, we're working very closely with the various government bodies and regulators here to really showcase the UAE as a global leader in the AML CTF space, not just here, but also regionally and internationally as well.
Thank you. And John?
Hello, thanks for having me. My name is John Abbott. In terms of background, I spent the first 10 years of my career at JP Morgan, working in the M&A group in New York and then in Sao Paulo. I then spent 10 years running a NASDAQ-listed consumer internet business, where I got to learn about technology and then sort of combined both, started a alternative asset marketplace about 3 years ago, and that led to us developing some interesting AI tools that automates financial reports. That business is Bullpen. Thank you.
And Adish?
Hello, I'm Adish. I'm the founder and CEO of Shizan. Shizan is an decision intelligence platform for institutional investors to understand climate and its impact on their portfolios in their net zero transition journey.
Hi, I'm Madiha Sattar. I'm a growth ventures partner at BNY. For those not familiar with BNY, it's a global firm that really serves as critical market infrastructure for capital markets and financial markets more broadly. To give you a quick sense of scale, we custody about $50 trillion of financial assets. It's 1/5 of all the world's financial assets flow through BNY's platform in some way, shape, or form. We are number one in US government securities clearing and settlement. We are the world's leading collateral manager. So just a ton of sort of data flowing through our platform when it comes to financial markets and capital markets more broadly. Growth Ventures is a team within BNY that builds, buys, and invests in new technologies and commercializes new technologies that are adjacent to our core business. So of course, this topic is super relevant to some of the things me and the team are working on.
And hi, good morning. I am Hassanat Diwan, co-founder and CEO of Integrated Data Intelligence, IDI. So IDI is a startup right here in Abu Dhabi, set to transform the way private market investing works. We are here to apply AI to the full life cycle of private market investing. And we believe that this is really going to transform the entire process from deal sourcing all the way to portfolio management. And the most interesting thing about IDI is that we are building this full stack technology right here in Abu Dhabi.
Thank you for the introduction. So, Deacon, we'll start with you. So you mentioned you're in financial crime, right? And why is due diligence important for today's investment and startup ecosystem? And where does AI come in here?
Well, thank you. So all founders, startups, and investors here will have both legal and regulatory requirements to do due diligence on their investors, clients, suppliers, and third parties. And at Themis, we can help with that. But much more importantly, we are also protecting our clients from the reputational and financial risk that they run from any unwanted associations with criminality and organized crime. So we work with lots of investors here in the UAE to automate and streamline their due diligence, both on their source of funds, so making sure they've got good, clean, reputable money coming into their funds, but also on their outbound capital flows. So if they are making any investments into private companies, really kicking the tires to make sure that there are no skeletons in the closet that are going to come out and burn them in 5 years' time. Let's take a recent example of a very well-known fast fashion business. They recently lost over $1 billion in their valuation in just 4 years. And why was that? That was because an international paper published a story around alleged forced labor conditions in their clothing factories, and they never recovered from that reputational damage caused. In fact, not only did they lose $1 billion on their valuation, but they currently have $100 million lawsuit against the owners and operators from some very angry investors. So how can AI help that? Well, really, criminals themselves are using increasingly sophisticated technology to further their own illicit activities. And actually, we recently published a paper with ADGM and the National AML and CTF Committee exploring things like how criminals are using invoice fraud, deep fakes, to trick people and businesses into giving them millions of dollars that they will never, ever see again. So we need to stay on top of that criminal behavior. And really, AI allows us to do that by parsing millions and millions of data points together so that we can really clearly and easily identify that risk. And ultimately, what we're then talking about is making better, faster, safer decisions. So really, this is an enabler of good business here in the UAE.
Thank you for that. And John, so how have you utilized AI technology in the private equity market space?
So we have a private equity marketplace focusing on private equity syndications. These syndications are done within very short periods of time. And so what we started developing was a way to automate our reports. So we'd spend maybe on average about 6.5 hours reviewing deal information and preparing a standard sort of 6 to 8 page report. Through the use of AI, we've got that down to 30 minutes. So it's 2 or 3 minutes for the report to be generated, another 25 minutes to proof it, and then it's sort of client ready. So that was a big productivity gain. And there's the due diligence as well. So typically our deals have hundreds, if not thousands of pages of information. It's very difficult to get through it all. And so through the AI, we can essentially address any question, filter any issue up front. It helps the screening process. So then once you actually have investors engaged, you can get responses in real time.
Thank you. And Adish, so in the context of sustainability, how can AI tools help in making better investment decisions that align with both profitability and environmental goals?
Yeah, so you need to consider the first part, that what are investors actually looking for when they are trying to integrate sustainability or climate into investment decisions. One is they're looking for answers to what is the financial impact of climate on their investment performance? What are the fundamental factors that drive climate performance of their individual investments? And what is the impact of their capital allocation decision on the climate? And to do that, one is to ensure that the quality of data that you have, especially climate data, which is highly unstructured and fragmented, you're able to make sense of that data in the context of your investment thesis. And also with AI, you can create in-depth and comprehensive fundamental analysis to understand those factors that drive climate performance and build correlation with the financial indicators of your investments. For instance, if you're evaluating a company that plans to transition to net zero by 2030, let's say, so they'll require a lot of capital expenditure in transforming their operations and their entire value chain. That could impact their distribution, their manufacturing, and the output, which could, impact their revenues, profits in the short term, where they could have, done business as usual and maybe could have made more profits. But in the long run, it could help them stay more competitive in the industry. So with AI, you can understand all of this data and connect it to the financial data. Right now, investment teams spend anywhere, investment and climate teams spend anywhere from 6 to 9 months just to collect data and report it in their sustainability reports. But the output, the result is not, fundamental level integration into investment decisions. So with AI, you can, understand and map and take actions just by taking climate as an important factor in the economy and not just because you want to have a good impact on the environment, which is what we want. But you also need to, integrate it because you want to maintain or improve your investment performance.
Thank you. And Madiha, in terms of BNY, for asset owners, asset managers, and other investors in the ecosystem, how have they been using your platform, and how does AI support their decision making? And what other areas do you see AI can add value in this aspect?
Yeah, I think one of the products or platforms we're working on at Growth Ventures, which we're super excited about, is a data analytics and AI platform for financial markets participants. And this is already sitting on sort of $50 trillion of what we call assets under data management. So there's a huge data corpus behind it. But how do you make sense of that data if you're an investor? And the key value add here, or I'll mention a couple of key value adds, is let's say you're an LP invested across multiple asset classes, public equities, public debt, but also private equity, private credit, real estate, venture capital. The data that's coming in that you need to analyze in order to make smart decisions or to even track your performance intelligently is coming to you in multiple different forms. Your GPs are sending you PDFs and emails. Your team is modeling on Excel. You've got a public data feed from Bloomberg or MSCI. How are you actually able to pull all that data together out of these various structured and unstructured data sources and create a comprehensive view and actually make sure that data is consistent and accessible? So we're already using AI to extract that data from multiple different data sources. The other piece where it's already being used is data classification. So again, the same piece of data might be referred to in a different way across all of these different data sources when it actually is referring to the same type of underlying data. So it sounds a little bit dry, but this sort of classification of metadata is super, super important to be able to actually use that data intelligently and make decisions. So those are two pieces that we have live on our platform today. Another one that should come very shortly is the ability to use generative AI to run intelligent search queries that are actually insightful. So again, you're a sovereign wealth fund. You've got sort of hundreds of billions of dollars invested across multiple asset classes through multiple teams at your organization. If you just have a simple question, which is, what is my exposure to European manufacturing? Because you sense a policy change coming down the pipe. That Gen AI should be able to look across your data and give you a smart answer to what your exposure is. So those are two or three of the things we're working on in our analytics platform for investors.
Thank you. And Hasanat, so IDI has been talking about lifting the veil in private markets investing. So can you talk us through around what that entails and why that's so important?
Yeah, thank you. So one has to understand like some of the key differences between public markets and private markets. As you all know, public markets has extensive data transparency, either by regulation or just because of the trading venues and exchanges. There's a tremendous amount of data available. But the situation is almost diametrically opposite when it comes to private markets. The private markets are basically opaque. So that's really the stage that is a backdrop on which we are operating. if you think of, again also that the engagement with private markets is actually increasing, many new investors are coming into this market because of new modalities of access into the market. But the situation with data transparency has not changed. It persists, and it's across the board from basic data to analytics. It's basically non-existent. So therein lies an opportunity, a business opportunity, and IDI, our company, is working very rapidly, and we just launched our AI co-pilot platform called Dana, which is addressing these issues. And I'll tell you very briefly how Dana is doing it. So it's not going into too much detail, but first is the question of how you actually have data on the private markets. Now, this data is highly fragmented and disaggregated. It's all over. And if you look at public sources, you have to think about putting together a jigsaw puzzle corresponding to every company. And there are millions of companies. So how do you do that? Well, we are using AI at massive scale to assemble these millions of jigsaw puzzles. And we're doing it using public sources at internet scale, using our own proprietary technology and models. And at present, we have a massive database from that. But that is not the real trick that we have. What we are doing is we're training a whole collection of proprietary domain-specific models that are learning from all this data, hidden patterns, and is able to project and actually infer the trajectory of companies into the future, right? So in brief, these two things and many other things combined, Dana is actually helping lift the veil on public market investing, and it's filling this really important need.
Thank you. So we've talked about the positives, and let's look at the more on the skepticism side of things. Deacon, you know, there's a lot of worried commentary out there about AI replacing jobs, which is something that we talked about in the previous panel as well, and competing with the human brain. What's your take on this?
So the risk of AI taking over people's jobs, well, that's totally natural and understandable. But as the founder of a business that brings together the very latest in AI and machine learning solutions with our own team of dedicated intelligence agents and risk practitioners, I see it in a slightly different way. So I see that AI is a massive enabler. It augments our capabilities as humans to do more business and make better, faster decisions. So if I can give you a quick live example just to paint that picture. Recently, we worked with an investigative journalist who was investigating the links between a PE fund and a Latin American drugs cartel. Now, he had been on this investigation for 9 months. He had spoken to whistleblowers in the company who had actually informed him of these links. So he knew it was there, but in 9 months, he was unable to find any direct evidence. So he came to us, we gave him Themis search, and in half an hour, he was able to find direct and evidence-based links from the PE fund to the Latin American drugs cartel. Now, that was through 7 degrees of separation, so 7 layers of corporate data from the UK to Jersey, to the Seychelles, to Dubai, to the Maldives, and back to Panama, where the company was the known operating company for that drugs cartel. But in half an hour, he had direct evidential proof of criminal intent and wrongdoing. So imagine his joy, 9 months of work, and he'd solved that case in half an hour. And for me, that is really the power of AI.
Thank you. And, you know, Madiha, moving on to you first. Moving beyond core investing activities, how are you using AI to improve other financial services for clients?
Yeah, we've been at this for about 5 years in terms of building AI for customers of our various services, not just the data and analytics I spoke about, but of course all of our core businesses around custody, payments, clearing, settlement, etc. And by the end of this year, we'll have about 40 use cases live in production for our customers. To just give you a couple of examples, for our payments business, extracting unstructured data from wire transfers, sort of passing that on to the payment processing engine such that it can deliver then value-added services for either the merchant or the consumer based based on that unstructured data that has now become useful, right? Another tool that we use is liquidity forecasting, sort of getting very smart about informing customers about what their cash positions are likely to be at the end of X, Y, and Z time period, such that they can make really smart decisions about what to do with the cash they have on hand and how to actually deploy that cash for returns on an intraday, real-time, over a week basis, right? So really being able to be much more agile in terms of how do you actually deploy your liquidity and perhaps earn a return on it based on our forecasting models. Yeah. Another place we deployed is sort of on the trade side, predictive analytics to predict the likelihood of a trade transaction and the associated payment settling on time. What are the risks to it? When is it expected to settle, etc., such that you can get ahead of any bottlenecks and actually address them. So given the breadth of services we're in, there's a lot of different use cases, like I mentioned, 40 by the end of the year in production. And a lot of it is actually, this is not just about workflow automation. That we're doing more internally. We have an enterprise AI system that's sort of making our own colleagues much more productive. But on the customer side, we're focused on actually unlocking value even more so than sort of efficiencies.
Thank you. And Deacon, can you briefly tell us more about how AI tools led to building your business bullpen? Oh, sorry, John. Can you tell us more about how AI tools, it's just because we're short on time, led to building your new business bullpen and the type of financial firms that have been adopting it? Sorry, we just only have 3 minutes or so.
Yeah, I'll go quickly. Yeah, I mean, I think what our value proposition is to make people more productive, to allow them to do more thinking, more value-added work. So the example I gave before, if you were previously spending 6.5 hours in a report, you can do it in 30 minutes. It creates a much better experience. I think culturally at firms where people are overworked, it's really a game changer, and so that's really allowed us to engage with all sorts of financial institutions, from large banks, investment banks, to wealth managers, buy-side firms. So yeah, pretty much across the board.
Thank you. And Adish, so there are concerns around the environmental impact of AI growth. How do you see this, and how can it be balanced? And Hasanat, if you have any inputs here too, we can please also do highlight that.
Yeah, so with AI advancement and more demand for data centers especially, there's of course going to be increase in demand for energy consumption as well as water usage. But that's also leading to more innovation using AI itself in terms of improving energy efficiency. For instance, Google was able to reduce its data center power consumption by 40%. And then it's also leading these companies to look at other sources of energy. For instance, they're looking at nuclear power, which in turn could also help in terms of reducing the per unit cost, for especially in case of nuclear, which has not been as competitive as other sources. And at the same time, for investors, I think it also presents equally an opportunity to invest in AI across different sectors where it can be applied, and also help improve investment performance for themselves, because now you have the technology to understand more data at speed and with more precision.
Yeah, and just to add to that, we have to understand that we are really at the very beginning of the transition into AI in a serious way. And there will be lots of optimizations possible, both on the software side and hardware side. On the hardware side, there will be very specific chips for training versus inference. There will be a lot more that can be done by pushing out inference to the edge. And that's definitely, for example, Apple has that as part of their policy, and many other companies are going to follow suit. And then on the software side, lots of things can be done in quantization and other software optimization techniques. So when you combine all of these things, 2 or 3 orders of magnitude more efficiency can be bought back, even though we would need more computation. But on net, I don't see that the energy demands are going to really completely overwhelm us.
Thank you very much. Unfortunately, even though we had 2 or 3 more questions, our time is up, but this was a really good session. Thank you very much to the panelists, and thank you very much for joining us today.
Thank you, Jess.